Folks, Dan Frio here with your closing bell for May 8th, 2025. So we had mortgage rates go up a little bit. The bond market looks terrible if you look at it, but it didn't really affect mortgage rates that much. The culprit of the day is basically right through here. I kept telling you, if tariffs come out well, you're going to see the stock market rally. But my thought was the disconnect in stocks and bonds and everything else wouldn't send the market off that bad with mortgage rates. And then when you look at the mortgage bond market, it looks terrible. So let's make sense of all this today. So let's get to it. My name is Dan Frio. Actually, I'm a federally licensed loan officer. So if you're looking to buy or refinance a home, hopefully I can help you out. We have a slogan here: one application, one credit pool. We're going to shop your loan over 30 lenders. I'm going to explain that all to you at the end of this video because you're here for these things. So mortgage rates went up a little bit. The adjustable rate was the only thing that didn't really move because short-term rates didn't move at all. But the culprit of the day, the culprit is right through here. We had basically the tariff tensions starting to cool, and now the markets are rallying. So if you go to the stock market, basically all the way across the board, now this was up about 500 points earlier, but basically across the board, we have everything up. You also have, a big risky trade that's I'm going to show you here in a second. You have the VIX dropping 4%. So the VIX is showing a little bit calmness in the market. But here's what's telling me there's more exuberance in the air than just what meets the eye. You also have cryptocurrency. Look at Bitcoin. In just a little bit, this might hit an all-time high. So if you're looking for a place right now for safe havens, it sure isn't Bitcoin, and the stock market would seem a little bit concerning unless there's more to this tariff deals than meets the eye. So what you're going to see, if there's a great correlation going forward, the better the economy is going to get. Well, unfortunately, the rates might not get better. So let me explain why. You go over through here, and what people normally do in a normal market is they'll sell bonds and put their money into stocks if they see a great opportunity in stocks in the long term. What people have been doing lately is they're saying, okay, we want to get out of the stock market. We don't want any risk right now because we really don't know what the government's going to do with tariffs. So they've been pouring their money into bonds. But then you have this beef between the federal government and the Federal Reserve going on and all these other things. So basically there's a complete disconnect with all these things. But if it gets back to normal, if you see the market, the stock market and the equity markets rally, it's usually not good news for bonds. But I think right now, this is way overdone. Okay, the minus 44 today is just, I can't figure out where it came from and why there was such a dramatic move. I think this is a little more euphoria in the markets, I guess, as I'll say. Everybody just dumping everything, just jumping into the stock market. And then, maybe the bond vigilantes are back. So we're going to pay close attention to these. But a 44% move in the market would normally equate out to a little bit worse than this, but I'll take it for the day. So mortgage rates didn't move all that bad today. But again, folks, as the news gets better and better and better, it might not be the greatest news for what's coming with rates. So one of the things we also want to watch for is the economic news that's coming out, because every day the news that's coming out that's not tariff related should normally play a role in what's going on. But the good news we have for tomorrow is there's really no news out there. We have a Fed official right here, Williams coming out speaking. You have to, Fed Waller speaking. You have to pay attention to these people who's speaking from the Federal Reserve because they're either in one camp. It's kind of like our politics. You're either on that side or this side. Well, even at the Federal Reserve, there's people on that side and this side. They're called doves and hawks. Okay, so if you're a dove, you're always thinking, okay, we can reduce rates. The economy's coming down, nicely, and we'll reduce rates. If you're a hawk, you're always trying to find something out there to say, no, we're not going to move rates and everything. So you have the contrarians, kind of like me and all those crash people out there. I've been telling you for years, the market's not going to crash, and the why's behind it. So now we finally have a little piece of Florida, and that's starting to crack. Is it going to be as bad as 2008? It shouldn't be, but there's more dynamics down there than just meets the eye. It's all climate and insurance and a whole bunch of other things, and I lived through it as well because I have a condo down there as well. So tomorrow we're going to pay attention. When I do the opening bell, I'm going to advise you, these people who are talking, what side of the camp are they on and what should we expect? Because that might flow into the market to tell us maybe where tomorrow's trend would be, basically, because when the Federal Reserve member speaks, most of the time the markets listen. So that's our report for today. So let's get over to me and who I am and what do I do. So my name is Dan Frio. I'm actually a federally licensed mortgage loan officer. I've been doing this for over 35 years, folks. If you'd love to use me for my experience and my knowledge, that would be fantastic. But one of the interesting things we have here is we have a slogan. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, the bank I work at, and again, I work at a federal bank, is set up with 33 other lenders that we can do business with. So basically, by putting in your application right through here, we can use our products and the rates, and I said it right, the interest rates from all 33 other banks. So think about it. Putting your application in here is like putting in your application with me at the bank and also 33 other banks. So if we can help you out, if you're looking to buy or refinance, please visit us at therateupdate.com. Right above my head, you can put in your application. Right over there, you can schedule a consultation, or you can check out some of the videos we have down right through here. My YouTube channel has over 3,000 videos to help you guys navigate real estate. A lot of them that we handpicked are right here. These are probably one of the top videos that we have. So check these out. If you'd like to learn anything else, please reach out to us. We'd love to help you. Thanks for watching. God bless. And all I ask you to do is one thing. Just please hit the subscribe button. Help me get to 50,000 subscribers as soon as we can. Thanks a lot. Take care. God bless. See you tomorrow. Bye-bye.